Well, thank you for joining us today. Let me start by introducing myself. My name is Bikem Kanık, and I am an executive board member for Orbit Consulting. As Orbit Consulting, we provide sustainability consultancy services specifically for the textile industry. For today, without exception, everyone would agree that a sustainable future is a common agenda and a need for the whole world. Especially during this pandemic, we have come to realize the need for change even more. Nowadays, every sector and industry, doesn't matter big or small, they have to change the way they do their businesses and operations. Of course, those who have already rolled up their sleeves today to create change will definitely be in a more advantageous position and, more importantly, one step ahead of the game of the competition. The fashion industry is currently the second largest polluting sector in the world in terms of its negative environmental impact, and therefore nowadays has entered into a period of significant change, led by big brands and, more importantly, by consumers. In this regard, unlike any other sector, the customer base of the fashion industry is becoming more and more conscious of their actions. Meanwhile, they are putting forward their demands. Furthermore, with the entrance of the Generation Z consumers, this awareness and the need for change is increasing day by day. Businesses that realize the need for change and transformation will definitely need the right guidance and financing models to support them through the transition to sustainability world. That's why we choose sustainable finance as our topic for today. As Orbit Consulting, we are an exclusively textile-focused sustainability consulting firm, founded with the vision of working with our clients on their change to transformation on this path. In this webinar with Levantine & Co., we want to share with you a detailed introduction to sustainable finance concept. We hope that it will be an interactive one, and if you send your questions, we will do our best to answer them. Atilla Kadıköy is here with us today to introduce us to sustainable finance, and he will share his knowledge on what global opportunities are available within this concept. Atilla is a managing partner at Levantine & Co., a Cape Town-based financial services firm with an advisory service focused on sustainable finance. Therefore, I leave the floor to Atilla to introduce himself and Levantine & Co.
Thank you, Bikem. That's a great start to the webinar. So maybe I can start by talking about a little bit about Levantine & Co., as you mentioned. So we are a Cape Town-based financial services provider with an international footprint. South Africa serves as an excellent location, providing a strong, as it provides a strong regulatory framework to operate in a highly educated native English-speaking talent pool, eager to meet the challenges that emerging markets and sectors like textile industry are facing. Our firm has two pillars of operation: wealth management for high net worth, ultra high net worth, and family offices. But more importantly, the second is investment banking and advisory services within a sustainable finance framework. And this is the subject for today. Now, Levantine & Co.'s primary geographic focus is Europe, Middle East, and Africa, but we have recently worked closely with an exciting Asian project in the apparel supply chain. Levantine & Co. provides, let's say, the traditional capital raising, both equity and debt markets, and M&A services, but as mentioned, inside a sustainable framework. So, sustainable finance framework. So hopefully today, we can explain a little of what this means and a little bit about the sector and the types of solutions we're able to provide our clients.
Okay, thank you. Okay, let me start with my questions then. My first question is, let's say, as in many other industries, the developments that we are observing in the textile industry includes many difficulties, but it also holds exciting opportunities, of course. From the aspect of an international financial perspective, how do you view these global trends, risks, and opportunities in this industry?
That's probably the best question to start with. And as a financial services firm, we're seeing rapid change in the industry, whether it be from all the way downstream in the retail to, of course, the production. And we believe there is going to be a change from buy, use, the trend that has taken over of buy, use, and discard. And so where are we heading? And this is the exciting question to what you're saying is, now, interestingly, we don't see sustainability as a trend. We believe it's here to stay. It's not just a word, and because we can't carry on like this. If we look at the numbers, I think they'll be self-explanatory. 1 in 6 people are employed in some way or another in the fashion industry. Most of these are women. The majority, especially in the supply chain side, are in emerging markets, and only a small portion of these people earn a living income. About 20% of industrial water pollution is related to textiles, 10% carbon emissions derived from the textile sector. 25% of all chemicals produced are used in the textile industry. If you think about this, this is crazy. According to the World Wildlife Fund, it takes 20,000 liters of water to produce just 1 kilo of cotton wool. This is just not, we all know, this is just not sustainable. We can't carry on like this. And like you alluded to in your question, most companies possibly see this as a financial burden, while we are seeing this as an opportunity. That the leading companies, we believe, will take this opportunity. Now, this opportunity I like to call the Kodak moment. And it's about companies embracing transformation and the difference between the following companies, the companies that follow rather. Now, why I call this the Kodak moment, because I think this is one of the best examples, unfortunately for Kodak. Now, until a digital revolution, as you know, you and I know at least, Kodak meant photography. It was like a household name. Everyone knew Kodak. And I'm curious to find out how much of a younger generation now actually know the company. So the company knew exactly what was happening around it with the digital revolution, but just failed to act. It stuck to its business model. And in 2012, the company filed for Chapter 11 bankruptcy protection. It was just too late for, it acted, but it just acted too late for the digital revolution. And a stock that once traded for $60 is just like worth a few dollars at the moment. Now, the irony is, and this is a lesson to be learned, is Kodak produced the world's first digital camera back in 1975, but it failed to take the initiative, fearing it would cannibalize its then thriving camera film sales. So the lesson is simple. And as we wish, our clients and the companies we work, our primary wish is the companies we work with and our clients, our partners, to see themselves as leaders and embrace the change, as we believe they will come out stronger and more profitable in this period of transformation.
Okay, I like your expression. Let's say it's a takeaway sentence of this webinar. Sustainability is not a trend, it's here to stay. That's a good one. Okay, coming to the subject of our conversation today. Although it is difficult to say that we all are sufficiently informed about sustainability, one we can say that in general terms, we observe that the sector has become more and more aware of the concept of sustainability, of course. Still, let me ask your point of view again. How do you evaluate the concept of sustainability in the textile sector?
So this is a really important starting point, because the best place to start is how you measure sustainability. And what we take as there's really two basics. There's United Nations and then the IFC performance standards. And here we have an example of the IFC performance standards. And we believe these are the best benchmarks to measure sustainability from. And why measurement is important? It's not about just buying new equipment or strapping a few solar panels on top of your factory so you use less electricity. The simple principle, and I think the starting point, you may agree, Bikem, is it's about everything firstly being measured and accounted for. Everything you should do should be measured.
If you can't measure it, you can't fix it.
Exactly. I mean, how can you talk about if your new machinery is doing any good? And with that comes traceability. And I think this is one of the biggest problems that has faced the industry up until now. So you have to have a starting point of of measuring actually what your footprint is. And that would be the first step to sustainability.
Okay. Today, whenever the topic of sustainability comes to the agenda in companies, of course, nobody opposes as a concept. Everybody is in favor of it. Everyone says it's a must, but they also need to plan for this investment because it definitely needs an investment. In this respect, if we come to the financing component of the process, what does sustainability finance include? Can you give us some insights about this?
Yeah, I mean, the first thing before we start that, something I'd like to mention is, within this context, is sustainability is not a burden that brings, or is not a financial burden. Because it's the complete opposite. If you take the, like we said, these principles of accountability, measurement, etc., you become a more efficient company. And definitely on the long run, more efficient company is a more profitable company, and one that is less affected by its cost basis. But coming in more detail to your question and sustainability in the textile industry, I think you will agree these are let's say the six main areas that we can say that should be our focus. And that is sustainable management systems, social compliance. Now, social compliance is something that a lot of people actually, lack of a better word, ignore. They think of environment, while there's a huge portion is the social aspect of your company, your firm. Green factory plant. Again, another thing is supply chain management. Out of these two, I think it's extremely important, and will going forward be more and more important in the textile industry. So sustainability, how do you measure it when it comes to the textiles? If you like, I can further go into that within the finance framework. So when you look at a company, the traditional way of measuring a good company would be profitability. The profit side of it. But with sustainable finance, we like to use the principle of a triple bottom line. So we don't just take profitability, we take the human impact, the people involved. As I mentioned to you earlier, only a small portion of people involved in the industry actually earn a living wage. This is hugely important. And of course, the planet. So when you bring all three aspects together, you have sustainable finance. And this is more and more important, and is becoming more and more a factor for companies in emerging markets. So you're seeing a growing trend of financial institutions using, let's say loosely, these three principles when looking at projects. in emerging markets. And considering a large portion of the textile industry is in emerging markets, we believe that sustainability should be more and more on their agenda.
Okay, I'm totally agree with you. These 6 areas are the more important ones. We have to put our fingers on them to fix the current process situation, or maybe improve the current processes. This is definitely important one. Let me ask you another question. What kind of actors does the ecosystem consist, the sustainable finance ecosystem consist of, and what different financial instruments? Can we provide some details on this subject for our listeners? Probably we're not just talking about the organizations like the World Bank or EBRD, right?
Yes, absolutely. Now, firstly, here's a really good example of how quickly and how large sustainable finance is becoming. So here you're seeing the growth of funding that is linked to environmental and social requirements. In just 10 years, it's tripled in size and is expected to reach 160 trillion by 2036. If, like me, you follow the news and you're aware, you'll see this is, like I said, it's not a trend. This is becoming more and more of a principle. And I think it's going to become the normal principle going forward. Now, when you come to the actual ecosystem, what does sustainable finance include? Again, this is really interesting. And here's a small section that I think you can say are the players in sustainable finance and financial instruments that are linked to environmental and social requirements. And DFIs like EBRD, etc., do play a major role, but they don't necessarily play a role directly to impact the companies. Their financial institutions like banks in emerging markets can also be funded by DFIs like EBRD, IFC, etc., to provide loans to local companies that have, and these loans have environmental, social requirements. Larger companies can, of course, work directly with such institutions. They're service providers, public listed companies as asset managers, a growing number of asset managers that only list in companies that have ESG scorings. There's government institutions, industrial associations, but what's more important is how a company can benefit from this, this network is not necessarily by borrowing money. The actual ecosystem is providing more and more tools that a company on the right path can benefit from without having to increase its balance sheet risk. One trend that I am very eagerly following is, for example, in the space of sustainable trade finance, where financial institutions are providing brands and companies that that have a supply chain, especially from emerging markets, with a trade finance solution where the terms of the trade finance improve according to the company's ESG scoring. So if a manufacturer in Latin America that is selling to a North American brand has a good ESG scoring, they will get better terms than a competitor that has not taken steps towards environmental and social sustainability. So when you talk about sustainable finance, it's absolutely not about just borrowing money from an EBRD, IFC, FMO, or these types of development banks. The types of tools and the solutions are becoming more and more sophisticated. And especially if you're able to work with industrial associations, you can provide potentially solutions that can impact a number of companies at once in a single region and make a grassroots difference. but it's about organization. I would say the most important thing is being organized and taking this seriously.
Okay, I agree with you. Now let's move away from theory to practice.
One thing to add, sorry.
Okay.
One thing to add in this ecosystem that's very interesting is the growing number of family offices, so private money, that is making investments, big family offices, with environmental and social requirements and goals within this space. The most famous is the Gates Foundation, where they only consider investments backing technology that has an environmental and social benefit. Impact, exactly. And this is becoming more and more of a trend, and we're seeing a lot of this going on. Sorry, back to you.
Yes, it becomes to daily practices, as I'm saying. What kind of processes await a company in the textile industry that considers the transformation to sustainability and seeks financing for these investments, for its investments? How would you suggest they start to this journey?
Good question again. And underline how to start the journey. This is a journey. There's no golden guidebook that every firm can open up and say, okay, this is what I'm going to do. And what is important for the institutions involved in sustainable finance, that a company takes the steps to become sustainable. And not that they're not looking for a firm to become sustainable overnight, because it's going to change. Today, this is how we measure sustainability. 5 years from now, the goals are going to move. The goalpost is going to move. Everything evolves. Everything gets better. There's going to be better technologies down the road. So what is important is, quite honestly, these type of firms just start talking to a company like Orbit, like Levantine, and start a dialogue and discuss a path to sustainability. And every case is different. Every company's goals are different. Every company's hurdles are different. And with a company, for example, like Orbit, one can assess the situation and put a path ahead for the company that it can financially accept, and with time will, with milestones, take it to its final goal. It's small steps. This is not a race like a 100-meter sprint. It's one step at a time. And that is the first step I would recommend for companies in the textile industry to start.
Okay, you're right. Definitely, our business practices start with a gap analysis. We have to evaluate the existing situation of the company regarding to the best practices and the competitors' examples. Oh, you're definitely right. Is there a real life case study that you can share with us about the same process?
Yeah, absolutely. This is one of my favorite examples, because here in this situation, there is immense measurable change. This is real change and backing technology. So our client is a innovation company, basically, a textile innovation company that completely embraced and saw the potential for change in the industry. And they have a technology that has a huge impact on the water consumption in the denim washing process. As you know, one of the largest users of water and polluters of water in textile industry is the denim industry. It's ridiculous, actually. And the amount of chemicals, the amount of substances that are used, and a lot of this, unfortunately, happens in emerging markets where uncontrolled that water might come up into natural water sources. So we presented the opportunity to the Dutch Development Bank, FMO, who jumped on the opportunity and financed a pilot project for this technology in Asia, and are planning to back the rollout of this industry. And we developed the business model for the company. Again, it's not about the technology. Of course, the underlying technology is the important thing. That's the stimulus for change. But it's how your solution has to be presented in a right, measurable way. It's like for accounting, for example, we have globally accepted accounting principles. And that's how you can compare. You have to have some context. And so we brought the business into IFC performance standards into the business model. So wherever the technology is implemented, there is an audit of the company, and it's done within the performance standards. But as a result, the FMO backs the rollout of and the spread of its production system, and funds the purchaser of the technology. So in theory, you have a company in Asia that wants to become sustainable, wants to produce sustainable denim. And we don't only just, so the technology provider doesn't only provide technology, they say, look, if you need money, here's a funding solution for you. And this is very important. And of course, the textile industry always works with a small capital base. It's a tug of war with money with companies like this. So it's a very good solution. And what's important, this patented technology is now recognized by brands as well as a solution. And when you have a stamp of IFC performance standards, the technology, the brand knows that, okay, this isn't just a machine, it's actually a proven sustainable solution. That is one of the favorite deals I worked on. And a second one that we recently working on, which I think is, again, an exciting way in how you can incorporate sustainable finance to everyday solutions, is our client is a well-established conventional apparel manufacturer in Turkey. Now, the owners of the company are looking for a strategic partner, strategic sale of the company. Now, we have created for the firm a sustainable M&A strategy. Now, what this means is, like I said, the company has conventional apparel manufacturing. There's nothing really that sticks out about the firm compared to its competitors. But the owners have understood that if they're able to become 100% in today's measurements a sustainable firm, then they're going to become a more interesting target for any company that's looking to grow inorganically, because they bring something new to the table, and that the valuation of the company is going to be higher, significantly higher, in fact, we believe. And it becomes an attractive target. So what we will, what we're doing is we'll be bringing in a sustainable finance institution as a minority stakeholder, along with debt funding into this company, to help with the transformation to becoming sustainable in a relatively short amount of time. And then at that point, look for a strategic exit, strategic sale in the company to an international strategic player. And we know, especially from Asia, there would be significant demand for such an opportunity.
Thank you, Atilla. When I look at the questions, the subject of greenwashing is coming, and it's an important one. Today, yes, we know that many companies are trying to show themselves as producers of sustainable products, even if they are not truly sustainable. Especially in the funding process, this is a problem, definitely, and it's the most critical issue. What would you like to say about this greenwashing issue?
It is definitely an issue, and it comes back to what we just talked about. People wanting to do things I think, and not really understanding how to do it. It's not, again, I'll reiterate, it's not about buying a couple of machines or strapping on a couple of solar panels on the top of your factory. So in essence, with sustainable finance, greenwashing doesn't work. If your company is backed by the right sustainable financial solutions, then you have taken the right steps. This is not a company that has greenwashing implemented or made itself look green. And also, again, it differentiates you to your customers between those who say they are sustainable and what is a real sustainable solution. And one of the let's say current problems of textile industry, there isn't a fixed, recognized benchmark of sustainability. I don't think this problem, by the way, is going to go over change overnight. But yeah, if you have a measurable system, if you implement a system, again, along with a company like Orbit, and you have financial solutions that are linked, backing your company to sustainability, there is no better evidence that your company is actually sustainable and not greenwashing. Because that subject of greenwashing will not last. You know, those companies do not have, I think, long-lasting business models, sustainable business models.
Sustainable models, let's say.
Yeah.
Okay, there is another question coming up. I think it's our last question, let's say. Impact investment. It was also my question as well. The share allocated to this area in the financial world, I know that is increasing amazingly and gradually. What are the trends in this space, and can you share us some information?
Yes, I mean, I need to be corrected, but I believe between currently 25 and above 25% of all capital has some type of environmental and social link to it. So, which this means that every type of solution out there in the financial industry that has a sustainability kind of agenda. But there are, I would say, two major, in layman's terms, and an easy way to maybe split it is, on the one side is impact investing. And impact investing is usually from, of course, from developed countries. And what it's trying to do is primarily create a environmental and social impact. And this could be anywhere from non-profit solutions, like creating drinking water for villages in a developing country, all the way to developing and backing technology at a venture capital level that is being developed to provide solutions for major global problems, environmental and social problems. For example, there are investment funds in the United States purely for now apparel technology, sustainable apparel technology. Then, maybe more the case for the actual producers out there, we have the sustainable financial solutions for their everyday requirements, which is debt funding, equity solutions, mezzanine solutions, trade finance, as I mentioned, very importantly, trade finance solutions. And some of these aren't directly from the source of a debt financial provider, but through intermediaries and local intermediaries in those countries. It's a very, today we're only touching the tip of the iceberg. And I think we could sit here and talk for a lot of time, and maybe we should follow up with second, third webinar where we discuss each specific aspect. And by the way, this will be available on YouTube. So if anyone has any questions or would like to listen to a webinar on any specific aspects of sustainable finance, I think Bikem and I would be very happy to do this.
Yeah.
And yes, so this is I hope I've answered the question. And but yeah, this is a becoming a more complicated, in a good way, and very encompassing sector.
Definitely. Okay, thank you for sharing your knowledge and your point of view today. Before closing up, I leave to you for your last words.
My last words?
Yes.
Well, my last words is that companies like ours, meaning Levantine and Orbit, are very committed to this. The change in the projects we see is phenomenal. I love what I do, and I know that companies do see this as a financial burden, let's say again. But if us or local equivalents of Orbit and Levantine, I would recommend just chat to these companies. We're going for a huge paradigm shift in, I think, manufacturing, not just apparel, but overall in manufacturing. And the environmental aspect is not something you're going to be able to ignore, or the social aspect. The consumer's becoming more aware. The brands are becoming highly sensitive. For example, the very terrible fire that happened in Bangladesh a couple of years ago in one of the terrible sweatshops there. Companies don't want this exposure, and there is a huge amount of pressure. So I would say just please talk to institutions and slowly start your path to sustainability.
Okay. Thank you. And thank you all for joining us today.
Thank you very much. And we'd love to hear your questions, and you'd be welcome to contact us at Levantine, or like I said on YouTube, just leave a comment under this video. Thank you very much.
Bye-bye.